Welcome to the May 19th, 2025 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. This was an incredible week, and I'm about to tell you why this week is a watershed for the crisis that we went through in April. We're going to call it Trump's tariff crisis. All right, boom. First point. U.S. major equity indexes, except for the Russell 2000 small stock index, are actually up year to date. Total return on all three major indexes, NASDAQ 100, S&P 500, and the Dow, are actually positive territory for 2025. Now, let's cover the drama. We're going to go a little more precise here. This is actually the Dow. And we have a big spike. What happened? Don't forget this. Trade progress with China. The negotiators from the U.S. and the negotiators from China, they met in Switzerland last weekend. We told you about this on the broadcast. Wow. Well, I guess they got to choose where they went because they went to Switzerland in the springtime. How nice for them. But anyway, they made progress. The Trump tariffs got slashed down to, I believe, 30%. And China said, we'll do 10 and we'll get back together in Switzerland and buy some more fancy drinks, I guess. But anyway, so the index has moved into positive territory. That was a big spike. You can see the tariff disruption when April started. April 1st was basically April Fool's Day. And we got the big tariff announcements, and the Dow sold off to 36,600, now back to 42,352. That's actually, it hit the highs this week that have been the highest since that tariff negotiation. But there was some other good news that most people missed. By the way, I'm Spencer McGowan, your financial weatherman, president, McGowanGroup Wealth Management. We serve affluent families right from the Crescent in Dallas. If you want to get your plan updated for 2026, well, call us or go to networthradio.com and contact us there. Here we have good news. I was thinking, and I was wrong about this, I thought all those tariffs in April, massive disruptive tariffs, I would have thought massive disruption to GDP, and you're going to have negative economic growth here in the second quarter because of the disruption in tariffs. But I had brought you the playbook from 2018, the last time we had massive tariffs and Trump was in office. And it showed that it really didn't disrupt as much as we thought it was going to. 2.4% is the current economic growth, and we are halfway through the second quarter. Atlanta Fed estimates it, gathering data every week and updating it weekly, if not more often. 2.4% economic growth. That's healthy. What about inflation? Wow. Okay, let's take a look at this. January. Oh my God, that's why Jerome Powell didn't cut. We're going to get to Jerome and Trump. They got a big feud going on. And what he said, what Jerome Powell said this week too. So January was like an annualized 6% on inflation. Now we've got 0.2, 0.2, and minus 0.1 last month. Well, 0.2% inflation is actually below the 110-year average of inflation since the Fed was founded, by the way. Anyway, 0.2 would annualize about 2.5%. But we have 1 month of deflation. If you annualize that, inflation is running less than 1.25% for consumers over the past 90 days and just 2.4% over the past year. Producer inflation, that's producer deflation, lower costs for companies. Wow, April just shocked me. You didn't get inflation and GDP is running along just fine. That's part of what the market's reacting to. Now, all that good news came out, and remember, Trump set the stage for this. First, he comes out and calls Jerome Powell, the venerable Fed chair in his suit, he calls him a Mr. Too Late and a total loser. Then, when he doesn't cut rates in May, he comes out and calls him a fool. Now, if you want somebody to do something, that's probably not the diplomacy you should use, but that's kind of Trumpian. Anyway, so Jerome Powell fired back this week and said, oh, we see longer term rates much higher as a result of supply shocks. So the Fed's gone on a mystery tour with everybody saying, oh my God, the disruptions are going to be severe. So far, they haven't been. So Jerome Powell just wanted to muddy the waters a bit with the good inflation report. And he may end up cutting rates at least a little bit for the June 18th meeting. We'll update you on that, so be sure to subscribe. All right, top 10, bottom 10. Feel the power. One of the best performing stocks last year was North Texas power generator Vistra. This year, Houston. NRG Energy, 72% year to date. This gives you a feel for what's working and where the big money is flowing. Palantir Technologies, up 70%. One of the most overpriced tech companies, but Supermicro, 53%. The tech rally was powering it. And Uber chimed in this week, 51%. They cut part of the deals in the Middle East magical mystery tour by Trump this week. Uber got some business there too. And CVS Health. They're actually putting people in jail for stealing stuff around the country now. And that's helped CVS up 37%. Who's losing? This was a very bad, horrible week for United Healthcare. CEO resigns. The DOJ is investigating them for criminal fraud in Medicare, and at the same time, they don't like the new CEO. Very bad, horrible week. United Healthcare down 45%, Moderna down 41% because nobody wants to take the vaccine. And you have Albemarle, lithium for batteries. They're down 32%. This gives you a feel for money flows, both the dangerous and the good money flows. So if we come back to good portfolio strategy, we at McGowanGroup Wealth Management, we want to be good at 4 key areas. Growth with income. That's dividend companies, hopefully rising dividends. And all the categories here, 3 of them have value at risk of loss. Sometimes they're going to be down. High cash flow. That's global lending. By the way, that's how we recovered from the 2008 crisis with record income. And we recovered to record profits in just 9 months using what? B-rated corporate junk bonds that are well managed. Wow, because bonds go back to par when the shooting stops. Growth with innovation, right? We want the best companies at the right price and safety and income. Tactical safety. We put some tactical safety to work in those April meltdowns, especially for those that had excess cash. The safety and income, that's a key part of the portfolio. And that's one reason that McGowanGroup Wealth Management should be on your roster of managers and wealth planners. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You could see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.